It was not long ago that Coinbase was amassing profits and sweeping investors off of their feet, as the frenzy around cryptocurrencies resulted in nearly $1.7 trillion of trading volume on Coinbase's platform. The company booked a net profit of $3.6 billion on $7.4 billion of revenue in 2021. No one was bothered about the excessive fees because they thought Bitcoin, Cardano, and other cryptocurrencies were headed to the moon. Alas, the crypto market burned and crashed, and the effects are still dominant to this moment. This narrative needs to change. Since the crypto market crash, a significant problem has been created for the famous cryptocurrency exchange. 2 years ago, the company converted just about 1.2% of the trading volume from retail investors on its platform into transaction revenue. Not only has transaction volume declined, but it has also become difficult to justify paying that kind of fee when speedy profits are no longer the normal norm. A legendary short seller, Jim Chanos, recently showed up on the Market Champion podcast and was straightforward about his claims. He believes that Coinbase's business model simply doesn't work, and he might be right, or he could be mistaken. Generally, Coinbase serves both retail and institutional clients, but the short seller does not trust that either part of the business works. On the retail aspect, the problem is competition, and Chanos sees it as only a matter of time before a company like Vanguard offers basic crypto trading with fees that drastically undercut Coinbase. As competition mounts pressure on Coinbase's ability to charge high fees, the company is likely going to need to slash those funds to retain customers. But this will make the bottom line, which has swung deep into the red last year, look even worse. Taking an institutional perspective, the problem is that Coinbase just does not generate much revenue. Around $133 billion of trades were conducted by institutions in the third quarter, which would have translated to just about $19.8 million of revenue for Coinbase. The institutional business would have to become great for it to become meaningful. Jim Chanos does not expect Coinbase to ever make any real money from institutions. If a business only works with the best conditions and favorable environment, then that business does not work at all. With the frenzying revolving around cryptocurrencies now dead, it is hard to see how Coinbase will transition to a viable business without another cryptocurrency bubble. The company is in dire need of help. With the state of the market, Coinbase wishes to usher in the next era of cryptocurrencies, one that is dominated by the utility as opposed to financial speculation, and this is what investors desperately desire. When Coinbase expanded staking offerings to add Cardano ADA, the coin rose to its highest levels, which were around mid-February. In a blog post, Coinbase stated, "With today's launch, Coinbase is offering an easy, secure way for any retail user to actively participate in the Cardano network and earn rewards." Back then, the crypto exchange estimated that there will be a 3.75 annual percentage yield on staked Cardano, and after an initial period of 20 to 25 days, customers will receive rewards to their account every 5 to 7 days. ADA was up 9% to $1.17 around that period, given that the crypto markets were broadly higher as well, including an 8% gain for Solana and 4.5% gains for Bitcoin and Ethereum respectively. However, the crypto market has not seen this kind of gain in recent times. The general crypto market has been plagued with a plethora of disadvantages. Given the significant increase in the ADA coin price when it was first added to Coinbase, it is safe to say that Coinbase is embedded with so many advantages for the cryptocurrency, and it is also safe to say that this is a mutualistic relationship since Cardano is not without its outstanding benefits. It has always been a long way up or the advancement of any company. Coinbase is not an exception, as it has several ways to go before it becomes the foremost staking provider. The last time Coinbase reported quarterly earnings, the company told shareholders it had prioritized the development of a staking product and had a long-term goal of becoming the top provider. When a user stakes their crypto assets, they are being loaned out to validators on blockchain networks. Validators utilize the funds to secure the network and process transactions, and in return, users receive a portion of the validator's rewards, and this has become an increasingly popular product for Coinbase. Now, let's bear in mind that there is hardly any asset that compares favorably to 2021 when the crypto market has surpassed a $3 trillion market cap, and Coinbase share price closed at $337.05. Since then, most company and crypto exchanges have carried out the grace to grass narratives. Comparing the first 9 months of 2022 to 2021 tells a completely different story. Coinbase added full support for Cardano staking in March, and this was an indication that Coinbase gained traction with some of its staking pools, but not Ethereum. In quarter 3, we launched institutional staking for Ethereum globally, and while adoption is still in the early days, "We are optimistic about the long-term opportunity," the company stated in a letter. According to the blockchain analytics firm Nansen, Coinbase accounted for 15% of the 13.5 million Ethereum that had been staked. By early October, the total value had increased to 14 million, but Coinbase's share remained the same. However, Coinbase had dropped and now represents 14% of staked Ethereum. But Coinbase users have not withdrawn their staked Ethereum from the platform. Nobody can do this until developers implement the Shanghai upgrade to the network. This is actually expected to launch in September of 2023. Nonetheless, it is an indication that people who wanted to stake Ethereum around this period chose to do so with providers other than Coinbase. But Coinbase's Ethereum staking business is facing another potential challenge. When the Coinbase CEO, Brian Armstrong, was asked if he would censor transactions on Ethereum or get out of the Ethereum stake, he opined that he would rather shut it down entirely. This question came up after the U.S. Department of Treasury's Office of Foreign Asset Control added crypto wallet addresses related to Ethereum mixer Tornado Cash to its sanctions list. There was no sign of federal regulators mounting pressure on Coinbase or any other crypto firm. Still, Coinbase has gone on the offensive. And right now, it looks like Coinbase is attempting to cut ties with Cardano. The U.S. crypto exchange released its 2023 crypto market outlook, but the Cardano founder Charles Hoskinson voiced out that the network was left out. This scenario is quite similar to an individual making plans about the future and omitting the paramount details. Of course, Coinbase was looking into the new year and tailoring its expectations. For companies like Coinbase, their foresight includes the development of important networks and how they expect those networks to perform in the new year. According to reports, the market outlook released by Coinbase include the likes of Bitcoin and Ethereum, developments as well as the subjects such as regulation and NFTs. In a tweet, Hoskinson noted that the report did not mention anything about the Cardano network. His tweet, which had included a screenshot of the first page of the 57-page report, stated, "Not a single mention of Cardano. Pretty low and pretty sad. I honestly expected better." This situation sparked speculation that the crypto exchange had deliberately omitted Cardano, especially when it mentioned other layer 1s such as Avalanche, Phantom, and Solana, all of which Cardano ranks higher in terms of market capitalization. A reply under Hoskinson's tweet also pointed out that the Cardano news and community updates section of the Coinbase app were all out of date, with the last posted highlight to be dated of October 4th. Quote, "I was recently curious why news and community updates on Coinbase under Cardano are out of date. Is that Coinbase's job to keep it updated? How come Solana has recent news?" With that being said, it's already a new year, and could this be a potential indication that Cardano is inching towards obscurity? Coinbase's report majorly revolved around the current crypto market landscape. Although it did not specifically mention Cardano, it focused heavily on layer 1s and layer 2s, which according to the report was becoming much more competitive with time. It explained that a lot of activity on these blockchains was swaying outside of the established cyclical market trend. Instead, each blockchain sees difference in usage and transaction growth not in tandem with one another. Quote, "There is a healthy user demand for solutions that address issues of scalability, speed, and/or transaction fees. But what is less obvious is whether this will become a winner-takes-all market." End quote. So it's probably too early to make any conclusions about the Cardano-Coinbase relationship, and there is no need to elaborate on this deliberate omission. Back on October 21st, 2022, Coinbase customers increased their net position in ADA, which implied that the asset was gaining popularity. Of course, there was an immense advantage at this time. This was when the Cardano-powered The Ape Society collection broke a record, becoming the first large NFT collection to reach 10K ADA floor price. Indeed, everyone loves what is good, and this particular trend could continue if there are favorable grounds for both Coinbase and Cardano ADA. But of course, what are your thoughts on this? Let us have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.